And cut. What's up, guys? How's everybody doing? Good morning. Good morning, good morning, good morning. Happy Thursday. Get started in a minute. Just give me a quick sound check. Someone actually was kind enough to reach out to me and give me a little tip, but I actually didn't get around to doing it. But they had mentioned or had said something about or inquired whether or not my microphone was plugged in. Sorry, not plugged in. Obviously, I just took a sip of my amino energy. Shout out to Amino Energy. They don't sponsor the stream, but it's a pretty decent drink. But they had mentioned that if I have the microphone plugged in to a separate outlet instead of having the microphone and all my other computer stuff plugged into the same, I guess, circuit breaker, that there would be maybe some distortion because of some grounding issue. I don't know. But the sound should be good. I've heard it before on different devices, and depending on what you're listening in on, there'll be like a background noise, I guess. But I'll get around to checking that out today, and we'll see if we could get that fixed by the time we stream again. All right. So sound is good. What's going on? Good morning, good evening, good afternoon, depending on where you are. It's early morning my time. It's about an hour after the NYSE Open. So we're going to talk about a few things today. I haven't streamed since, what was it, Monday? I was going to stream yesterday and then I had a change of plans. So today it is. But today's a good day to stream because tomorrow is Opex. We have a good amount of Fed speakers, I think, coming up today. So possibly some dry powder. Or I don't want to say dry powder because everyone thinks of money. But possibly some, we'll say, just, I don't know, explosive powder. Who knows? I don't even know what I'm saying. Gunpowder. That's what I meant to say, but it was escaping me. Apologies. So if you are new to the stream, please hit the like button, hit the subscribe button. I would appreciate that. I'm streaming now 3 days a week. And ideally, we take live trades during the stream. We'll go over some crypto and legacy markets, and then we do some AMA. So pretty simple. Don't want to keep you guys too long. Just over an hour's time would be best for all of us. Before we get into it, as a reminder, none of this is financial advice. This is strictly for entertainment purposes only. And shout out to the sponsors of the stream, Bybit and Cryptowatch. The links for both of those are below. If you are interested in signing up to Bybit, the link is tradebybit.com. That link is a vanity link. It gives you access to a host of bonuses. And as you can see, they're currently running a promotional feature right now. So Bybit is a phenomenal exchange. Bybit is second to Binance in this market. I did mention that they will be KYCing. So yes, they will be KYCing. So if you don't qualify to trade on the exchange, you can no longer trade on the exchange anonymously. I think that most exchanges are going to go this route. But if you can KYC, if you do qualify, be sure to take advantage of the bonuses that they offer from time to time. And some of the other incentives that they're offering more than bonuses to people that are KYCing. I think if you KYC and if you fall under a certain volume threshold, you get certain VIP perks as well. So be sure to check them out. They've always been a phenomenal exchange. It's a good team. I really appreciate them for sponsoring the stream. And then we have Cryptowatch. So Cryptowatch is this platform that you're looking at right here. I shared this last night on Twitter. I mentioned Agar, and some of you might not be familiar with what Agar is. Agar is actually, if we look at this window right here, and we're looking at my exocharts, where I look at more granular order flow stuff like footprint charts, CVD, TPO charts. I wouldn't say TPO is necessarily granular, but you have the Agar tapes right here. So we have the perp tape that is just a normal tape, so swap markets, so futures, and then we have just a filtered tape for larger size over 500,000 contracts. So a lot of you guys use this. I actually think that that's not the most superior tape right now. Not everyone's going to know what to do with the tape, but I will say that, just focusing on the tape when we're around key levels might give you an idea of how a tape is useful, whether key levels are holding or whether they're going. And by going, I mean giving or breaking. You could just see the level of participation in the market, the velocity of orders coming into the market, or I should say the speed of orders coming into the market. But I guess if you're picking up on velocity is a vector, right? So picking up on direction and speed. But the Cryptowatch tape, and again, Cryptowatch link is below for the desktop and the website. The Cryptowatch tape, I would say that it wasn't a superior tape because it didn't have sound. So one of the benefits of Agger was that you could turn the sound on. And me personally, I would change the pitches of the spot market versus the futures market. And just by that alone, I could pick up on when the futures market or when the spot market was doing most of the work. When we're seeing a lot of activity in the futures market, I'd hear one sound. When we're seeing a lot of activity in the spot market or when it's picking up, I'd hear another sound, a high pitch and a low pitch. So that was useful because you're not always going to be looking at a tape, right? You have a few screens, hopefully, and, they're taken up by things that range from, the websites that you get your data from, charting platforms, execution software, your social media platforms, Discord, Twitter, Telegram. And then you have a tape, which is just a little narrow thing and, might not always be front and center. So to make the most of it, you'd have the sound aspect, right? Or the audio component. Excuse me. I need to drink a little bit more coffee. I didn't get a lot of sleep last night. Baby was up most of the night, not doing anything in particular besides just kicking right next to me. Anyway, we're used to operating on minimal sleep. We truck forward. The audio component was nice because, again, didn't have to look at it, could just hear it change. If you're outside of the room, you could hear when something was changing in the market, when a bunch of liquidations were going through, again, when we were maybe in the middle of a breakout. Either way, you could see how that would be beneficial. This now obviously has audio, so it is no longer the case that, and you could set this to whatever audio you want. It's no longer the case that Agger is the superior tape in this market. So I have this set up to look at the Binance spot market and the Coinbase spot market. Cryptowatch is a cracking product, right? But we all know who is responsible for moving the market the most. By that, we also know who we don't necessarily have to pay attention to. I don't really look at Huobi or OKX or Bitstamp or, any of the other smaller exchanges. I want to know, where the big size is being swung. So it's Binance, it's Coinbase, it is the exchanges that lead by volume and by activity, and those two are where most of your attention should be. The same way, like if you're looking at, a lot of the shorter term opportunities that arise in the market, when the market trades to a level that forces a lot of other people to trade, where do you see most of the activity coming from? You see most of it coming from Binance perp market. So, what markets lead by open interest, what markets lead by positioning? It's Binance, and then it's Bybit and OKX, and those two are kind of switching in and out every other day in terms of leading by open interest. So this not only has the tapes, I have this filtered, right? So I have it filtered to show what side it's against. This is just a non-aggregated, non-filtered tape to get an idea of the overall speed. And then this tape right here is the same market, but it's actually just the spot market filtered for size. So on Binance, I have it filtered for 100,000 quote. So $100,000. You could do it as base, but I think it's easier for me to look at quote. And then Coinbase, I have it dialed down a little bit less. I have this set at 50,000, and that again is quote. So $50,000 order comes through. Someone buys $50,000 worth of BTC. Someone sells $50,000 worth of BTC. I get to see that filtered because, again, I just want to see when we're starting to see larger orders come into the market. Other two things you have right below those are just the corresponding charts. So a 1-minute chart, a 1-minute chart for Coinbase. And then below that, we have the spread. So this is the bid-ask spread. This is the distance between the best bid, best ask that's advertised, not the inner spread. So this is going to show you The red is the ask or the offer, and the blue is the bid. So you'll see, this can get pretty noisy if you zoom in. So you'll just see that if I zoom in, it's going to just constant flow of activity. The dots are trades against the offer, trades against the bid. What I like to do is zoom out a little bit just to get an idea of where it popped. And below, you could actually set this to be the actual spread distance by points, so by notional or by percentage. And this is useful because at a lot of turning points, you'll see me talk about spreads blowing out. And this is just one of the clearest ways to see that happen, right? When spreads really blow out, if we see that, the normal spread on, let's say, just to give an example, right? Let's say the normal spread on an exchange is 10 basis points. And, we blow through a high or blow through a low, and it jumps to 100 basis points, right, to a percent. So difference between the best bid, best ask is 1%. Pretty wide, right? I mean, some alts trade much wider depending on what alt it is. Actually, I don't know if it's much wider than that. I mean, if they're on chain, maybe. But the idea is when you see spreads pop, a lot of the time that is a good thing to identify for a turning point, whether it's low time frames or whether we're seeing high time frame turning points put in and high time frame pivots put in. This is also going to be corresponding with periods where there are a ton of liquidations as well. So that's where the spreads really blow out, and there's a much wider distance created between the best bid and the best ask or best offer. And, there's a host of reasons. You're going to have stops run. You're going to have the book completely evaporate, market maker step out of the way due to that toxicity. Again, a useful thing to focus on. So if I'm looking at the overall feel of the market, the overall flow of the market, the overall cadence, I'm going to be looking at the tape, and looking at these things in combination with it can help you if you're trading lower time frames, or even if you just, again, want to observe the market and see how the market is behaving around key levels and how things are changing with respect to those levels. So if I was going to say, hey, what's the best way to learn tape? One, I mean, it's not like you see a lot of people talking about the art of tape reading. Like, that's kind of gone out the window. And when I say kind of, actually a lot. I would say that that was much more useful before HFT came into the scene, right? It's not like your brain is going to be able to pick up on and disseminate the information as fast as algos will, right? Your brain is not microwave HFT. Your brain is an incredible machine, but it's not going to pick up on things that, again, are more prevalent now due to HFT and just a lot of different changes in market microstructure. But what I would say is, if you're using this in combination with a depth chart, an order book, a footprint chart, and then just market structure, what I would do is I would mark off areas of market structure that I think are going to bring in a lot of activity into the market, whether that is forced activity, whether it's an area where you think stops would be run, liquidity would be grabbed. I would mark off those areas. And then when the market trades into those levels, I would look at the tape. So look at the tape, look at tapes like this, look at, if you're more comfortable on Agger, look at the tape, look at the activity around that level, and see if you could begin to sort of pick up on anything that might be actionable moving forward. It is very nuanced. It is something that obviously takes a ton of time, but like everything else, right? You're going to only sharpen it by putting hours into it. And then I will say, again, this tool is made a little bit less useful by things like a footprint chart, by things like a CVD. Again, like back in the day, they might just be looking at buying coming into the market and assume some type of delta from that. Now we have other tools that smooth that out, that information out for us and make it less, less subjective. All right. So shout out to Cryptowatch. Let's take a look at, first I want to take a look at actually the indices. So I have up, and there's a couple things maybe we could talk about in the beginning, because again, it's going to be kind of open-ended. Smug Gensler, Opex, Fed speakers today, and FOMC. And I think that the last three of those are probably, you could group those together. So I'll get into that. Smug Gensler, I mean, I hope all of you watched the hearing where he was being grilled. Of course, he was being grilled by Republicans, right? But the guy didn't really seem to give a shit. It's really clear that Gensler has an agenda. Not only that, how fitting is it that he is really LARPy, he taught a blockchain course. And then when he was under oath, asked if he has ever owned any crypto, owned any BTC, he said no. Like, how fucking LARPy is the guy that he taught a course and never even owned any of it? All right. I mean, it's, I found it really hilarious. Watching his body language is always very interesting. It's very difficult to maintain composure as you get further away from your face. So if you are just staring at someone in the face, they might be able to maintain composure and decorum and tell you a bold-faced lie and lie with their face. But the further out you go towards your extremities, the less likely you are able to maintain that, I guess that level of anxiety or worry or dishonesty that comes along with, or I should say the anxiety that comes along with dishonesty, towards your extremities. So when you see the guy talk, his hands, he can't keep them still, right? And I don't think he has a tremor for any sort of physiological or neurological reason. I think clearly he is just exhibiting that he is a squirrely, shitty person. So I don't know. I just found it really, I found it to be a breath of fresh air to watch him get grilled. But again, there's really nothing you could do. Just to clarify to people in the chat who might not know, there's really not a whole lot you could do to take out the head of the SEC. I mean, he's in it probably at least for another 2 years. The only way that he would not be sitting in his seat before the end of next term is if he elects to leave on his own. Maybe he gets picked up by, I don't know, he gets picked up by some mega company as like a consultant, or, he gets a ton of money thrown at him. But the other part about him that is, I don't know, it's just comical, is that he's actually made it. So he's saying that he's out here to protect retail. And we all know that that's bullshit, right? We all know that that's bullshit. There are people that are in the United States that are actually accredited investors that are being told basically that they don't know better about what they're investing in. These people are qualified investors. So it's not like there's much discrimination on that front. But this is a guy who's saying he's out to protect other people and, he's looking out for the common person, the retail trader. Like, we know that is all fucking bullshit, right? The playing field in trading has never been more level between the whales and your common trader, whether it's access to data, whether it's access to speed, the flow of information. This has massively changed. When you have a institutional background, obviously there's some advantages that come around with that, right? You're being surrounded by the best and brightest. You have access to, very significant amounts of capital. Your risk, what you put on the line, is not really obviously yours, right? It's not like you're trading for your own portfolio at home and, your kid's college education is on the line necessarily. Yeah, you have access to probably some better information, but other than that, the playing field has never been leveler. And the guy is saying that. Meanwhile, he's worth like $100 million. So it's pretty disgusting. He seems like a pretty squirrely, shitty person. And excuse me, whenever I don't know, when I have strong feelings about someone, it's hard for me to be eloquent about it. Like, I'm just reduced to that, I guess, name calling, which, someone might be saying, oh, it's an ad hominem, you're making fun of his hands. Well, whatever. I could look at him right away and know that he gives a really clammy, dead fish handshake. That's all. That's all I need to know. I was one of those people that was raised like, you stand up, you look someone in the eye, and you give them a really firm handshake. I guarantee that you shake that guy's hand. I would be surprised if he even got up out of his seat when a woman entered the room, and if he got out of his seat when he was shaking someone's hand. I know it sounds ridiculous, but I'm making a lot of assumptions about him. I think they're probably accurate. And yeah, not saying whether or not ETH is a security or commodity. Here's what I'll say about that, and then we'll get into Opex and we'll get into price action. The CFTC has already decided that ETH and BTC are essentially commodities. They're trading on the CME. Okay, I can trade ETH on the CME. When I pull up The DOMs right now, you're looking at BTC on the CME, or this is looking at the ES, the S&P futures, the NASDAQ futures. So they've already basically decided that those, you know, the CME, the CFTC, whatever, you know, legal team that they have has already determined and done their due diligence and come to the conclusion that these are commodities. Now, some people will say after ETH's change, you know, after Shanghai, whatever, that it falls under a different category. The point is, like, this doesn't serve anybody, right? And I think it's clear that ETH is not a security either way. All right, so let's get into it. So Opex. So tomorrow we have Opex. It's a pretty significant options expiry. We're seeing a lot of pinning right now in the S&P due to this. So there is a significant amount of open interest right around, I think, 4150 and probably 41. So we're talking about the S&P 500. So with this, you have options writers that are obviously they are not interested in those options expiring in the money. So you have the idea of max pain and pinning, and those prices being kept in an area where those options will expire worthless. You know, if I'm selling you calls, I'm going to hedge that, right? I'm probably going to buy futures. I'm going to be buying the underlying. But if I have a significant amount of inventory and we're leading into the close, we're leading into expiry, and there's nothing that's going to create any kind of jump risk or it's going to send the market through that level, well, then I could use that inventory essentially to defend that level. Again, this is the sort of idea behind pinning, or just a very general idea behind pinning. So prices are kept in this really tight range. You're seeing prices kind of ping pong between 41, 41.50. When we got up to 42, which is kind of, like I said, the heavenly level. You want to see 42 go. If we go above 42, I think we're risk on. But you see, once we approach above that level, it's like, bam, ton of inventory hits the market and prices revert back to this little tight range we've been within. So after tomorrow, markets are not going to be pinned. So options expiry is the third Friday of every month, right? Every single month. That's what Opex stands for. It doesn't stand for every single month. It stands for options expiry. So after this, right, and you'll see a lot of people disagree on the idea of max pain and all of that, but either way, after this expiry, you know, the market, the idea is that the market will have a wider range to move within. You won't have this pinning phenomenon. And that'd be good, right? That'd be good. The VIX is crushed right now. The VIX is down around 16. You have a lot of people talking about, you know, this being support and an idea. I think it's more correlation than causation. I don't think the VIX being down here is a good sign that you should buy because every last time, or sell because of every last time the VIX was this flat, the expansion has led to a reversal. I don't think you should start employing that in your approach. There's a lot of people that also say very, you know, general simplistic things like, oh, when vol is low, it means you should buy vol. When vol is high, it means you should sell vol. It's not that easy, right? There's a lot of different counterparties in the market. There's a lot of people that might be continuously selling vol and buying vol, and it doesn't mean anything for your directional position or opinion. And it can continue to make vol elevated or continue to make or keep vol suppressed. So tomorrow we have options expiry. Again, this is the third Friday of every month. The exceptions might be when there's a holiday. But after this, again, the market's going to have more freedom to move. So I think a resolution out of this is the meaningful one to go with. This is all kind of tied into a really important place in time. And that's because we're around this key level. So again, we're above the 200-day. We're trading slightly above the what was it, 9 or 10 month range that we were stuck within, but we're below that 4,200 level. Outside of that level, after Opex, I think if we're above 42 and we're holding it, like, I don't think you want to be continuously selling this market aggressively. I think you want to be in sort of buy the dip mode. I've gone over this numerous times, right? Ad nauseum at this point. But keep in mind, we're talking about Opex, right? And why is this all important? Well, because legacy markets and crypto are correlated. So that's why I'm starting with all this. So we're seeing that on the lower time frames, a lot of the moves that are, and it's a matter of moves being volatile, right? It's not moving from point A to point B alone, it's moving from point A to point B with a good amount of velocity. So when we see big moves in the S&P, we see the same corresponding moves in crypto, obviously the majors. But so when we're past Opex and the market has a little bit more room to breathe, I think we'll see volatility come back into the market. Maybe after a week or so, we'll see the VIX begin to rise up again. So we'll see that come off. And then this leads right into the point is you are allowing things to expand, or the potential for them to expand into possible, major catalyst, which in this case is FOMC. And FOMC is in May. It's the first week of May this month, not this month. You understand what I'm saying, right? It's the beginning of the month this time rather than, closer towards the end. It's not to say that there are no FOMCs at the beginning of the month, but for the last couple of months, it's been towards the end of the month, third, fourth week. So this is interesting because, again, market's pinned right now. We're going to have a period, or we're going to go through a period into FOMC where no longer is that pinning present. Again, going into a catalyst like that, I don't think you're going to see a lot of people selling volatility. I don't think you're going to see a lot of people willingly providing liquidity around that event. So it could get pretty dicey, but dicey means fun if you're trading. So that being said, one thing to point out, the last couple of days, and this has to do with the 0-day expiry options, there's been a weird phenomena around 2 p.m. So reversal yesterday around 2 p.m. The last 3 days before that, around 2 p.m., we had a really strong directional move. And this is probably due to hedges that are unwinding due to those, what is a new tool in the market. It's not necessarily new, but it's become a lot more popular, those 0-day expiries. So I think this is something that honestly I'm going to look for today as well, as long as this pattern exists. I mean, today's open in the NASDAQ is pretty similar to yesterday's open in the NASDAQ. Yesterday's open, we're just looking at TPO, and this is a 30-minute chart. Here's yesterday's open, right? Here's today's open, same strong opening drive. There was a little bit more of, yesterday there was a little bit more of a range before we actually saw that expansion. But we're kind of, it's around 11 o'clock. We're maybe dying down a little bit sooner than we did yesterday. But again, I just want to see what happens around 2 o'clock to see if there's anything that we can glean from it and whether we could ride something that has a little bit more oomph to it. Because this was the pivot yesterday. There was a pop at 2, and then there was a complete rollover from then. So there's sort of the same behavior, overnight session. We're into the open this morning, moving down, base out at the open, and then we have an opening drive going into lunch. So honestly, as far as what I'm looking at right now, because again, this is going to largely influence, I think, what BTC does. If we end up topping out, if we get towards, we're getting around to 2 o'clock, and again, tomorrow is Opex. If we're not above today's POC and we're not holding this consolidation and sort of trading above, the last 2-day composite before yesterday. So this is right there. So it's kind of, let me just box that out for you. So it's today's POC. It's right around 13,150. If we're still moving sideways and having trouble into 2, I'm probably going to look for that same drive to take place, or at least it's not like I'm just going to take the trade on that alone, right? The fact that it existed before, but I'm going to see if that same flow comes into the market that we saw yesterday. The setup is there if we start losing this level here, just because there's not much structure between today's profile. So it's kind of like today's double distribution. You don't necessarily have single prints, right? So we don't have singles, but you can just see that low volume node kind of stands out. Again, market is showing a little bit more slipperiness. So if we start trading below today's POC, which is the low of this little rotation right here, that's back into a prior composite. So something like, 13,120 going. It's around 2 o'clock. We start to see some of those sells hitting the market. I'll probably look for this to get filled out again and for us to build some kind of value between 13,110 down to, again, the low of today's value, which is right around 1360. So that's something I'm looking at right now. If we start trading above this little consolidation we're building, and we're building value higher, and we're trading back above today's high, and things are looking like buyers are in control, I'll probably target yesterday's POC. So it's actually not yesterday's POC. That is where we're consolidating right now. I'll probably target yesterday's value area high. So that's right around, we're looking at, excuse me, it's actually the, let me just get my crosshair. It's actually the, it is yesterday's TPO POC, but it's our volume value area high. So right around 1370. So something like, let me get my drawing tool out, and we'll get to crypto in a second. So if we're able to remain bid above 13,150 or 13,140, right, this little rotation right here, or this consolidation, then I'll start targeting 13,170 and possibly back up to that composite value area high around 13,208. And again, if we're coming into this, if we're coming into that period afternoon into 2 o'clock, and we're seeing that buyers are showing a good amount of strength, then maybe the ripper is to the upside, right? It is to 13,208, is to yesterday's highs. I don't really have any strong opinions on this directionally. I think that we're approaching a point where you want to see that, if you're really bullish, you want 4,200 to trade. If you're a trader, you want 4,200 to trade, right? You don't want vol to remain this compressed and price to be stuck in this range still. I think you want to see 4,200, us resolve through that level before, before FOMC, or if we're above it after FOMC, after some kind of favorable announcement. The market right now is pricing in them pulling off by the end of the year, right? Pretty soon, this being the last hike. So if that changes, if their instructions are clear that that is not the case, then I think the market's going to be caught offside. Though we do have a good amount of hedging still baked in, and it's tough to make a hedged market crash or put in any kind of larger downside move. But again, I don't have any really strong opinions. I think we're coming into sell May and go away. That's for tax reasons. That's for very simple vacation reasons, honestly. Like, your more significant entities in the market aren't sitting at the desk trading during the summer. They are out at the Hamptons. They're in Antigua. They are spending time in Europe. They're not, aggressively trading markets. So you'll see liquidity and volumes begin to come off. I mean, if we just get rid of this and we look at where the NASDAQ has spent, the entire month of April, it's really clear that we've been in this really clean range, right? So for the NASDAQ, it's at that 4,200 level that we were talking about in, the NASDAQ was already essentially in a bull market before the S&P. Like, if you're going by many of the classic definitions, the DAC entered a bull market again, as silly as that sounds. But I think for the NASDAQ, this composite is really clean, and that 13,300 level, we see the S&P take 42, NASDAQ's going through 13.3, and then expect this thing to absolutely rip. But as far as right now, I mean, we're trading around mid-range of that structure. It's not like the most attractive area to have any kind of really strong opinions. When I'm trading the NASDAQ intraday, I'm using either a volume-based or a tick-based chart. So I'll switch in between times. I might go to an hourly chart. I might go to a 4-hour chart. But for the most part, what I've been comfortable using lately is this 1,000 volume chart. If you're just a really low time frame scalper, you might go to a 350 tick. You might go to a 250 volume, a 500 volume. But the problem is, if you're a swing trader, if you're an intraday swing trader, myself, my positions might be from 2 minutes to 2 weeks. Most of my trading is intraday. Some of my positions are, again, it really, there's a wide range. I'm not a tick scalper. There are a lot of trades I take throughout the day where I might, take a very quick reversal, a very quick trap setup that I think is going to offer a few points. But you really shouldn't be monitoring these markets on really low settings. If you're an intraday trader, even if you're, a scalp, the only time you want to be looking at really low time frame charts is if you're a scalper. Otherwise, you don't really get to see, or you get shaken out of a lot of things that you need to watch for development in. So for example, like if I'm looking at a level that I have an idea of, price either forming support or finding resistance at, if you're looking at a really low time frame setting chart or a really low periodicity setting, not time frame, what is development? Because there's a ton of trades that can come in a short amount of time, print a bunch of rotations, and you might think that development is taking place sooner than it actually might be necessary to discern that on, right? Or sooner than actually has. How do I put this? I would rather look at a higher. It's better to describe it like this. I would rather look at a higher volume setting, because if I'm looking at a 350 tick or a 250 tick, that doesn't even that's more like a 15-second chart, right? So here's I'm trying to put it in time terms because I know a lot of people use time-based charts. If I'm looking at a 1-minute chart, let's go to a 1-minute chart. So here's a 1-minute chart. Not a whole lot has happened. If I go to a 350 tick chart, that same area in price, you see a lot more has happened. But the reality is not much time has passed there. And if you're looking for signs of acceptance for swings, for intraday momentum trades, just for intraday trading, you might, just because a good amount of trading activity has come in, you might be looking at a setup that you think is going to hold for, a swing at a low or a high for a good amount of points for a big move. And the reality is you're looking at like 1-minute bar chart, right? Nothing happened. Just there's a ton of trading that came in. There's a bunch of HFT, obviously, so you're going to see a lot of trades take place. But really nothing happened. I would rather see something that looks more like a 5-minute chart, but is a non-time-based rotation. So again, a 1,000 volume chart gives me something closer to that 1-minute chart, or gives me something closer to a 3-minute chart. Now, this is going to vary because there actually hasn't been much volume that's been traded the last few days. But still, at least at that point, I could see, all right, I need to see something develop around a region before I start saying that the low is in or the high is in. I don't want to get into position prematurely and then get shaken out because the market moved up a few more points and then took the low again. Or it's really easy to get, I guess the best way to put it is to get influenced by noise. So when does sell in May go away? When does it come back? I wouldn't say July. That's a little soon. You might see some tax effects from that, but I would say, the most common time that people lean on for when they really start pouring back into markets is after Labor Day. So we're talking September. And seasonality absolutely is real. All right. All right, so let's get to the crypto market. You guys have any questions? Because I've just been talking for a bit. So for those of you that watched the last stream, one thing I pointed out when we were up here in ETH that's actually manifested. Manifested. What a douchey thing to say. One thing that I pointed out that is actually taking place is that that was a trap up at the high. So we were talking about this open interest, how BTC had come down, but ETH was quite elevated above the level and the market wasn't doing anything spectacular above 2K. For those of you that didn't watch stream, I was talking about how, an obvious level like that, you want to see that it creates fireworks, right? And then I backtracked and said, okay, there was a nice spike through the level, but we're really just hanging out around it a little too much. And while we were doing that, open interest was still quite elevated. So there's just a lot of participation that came into the market, unrewarded. And, since then we have come down. So you want to see that if you're looking at pockets of activity that come in and the market's not getting anywhere, a lot of times you're going to see these participants shoved, right? You're going to see them pushed out. And honestly, if I'm looking for a continuation play, I want to see that there's a good amount of liquidations and some of that positioning is taken out of the market. And if you're looking at price behavior and highs and lows, a lot of the time in the pullbacks, at the peaks, at the troughs, you'll see that open interest kind of respects a range as well. So, for each pullback before continuation, open interest is flatlined back to the same level over a period of, weeks or months. And this tends to be the case that when open interest comes back down to this level, you reset. There's some more sideline capital that could come in and get back in the move, but you don't want to get in anything that's too top heavy. The same way you don't want to short into the hole with open interest beginning to really rip up and hang out in a short when the market is no longer moving down and there are some liquidations that are coming on behalf of the price moving back up, right? It's just the idea of a lot of participation coming into the market, not getting rewarded, and then the market trading back against that positioning. And most of my trading it's been a really rewarding time for trend following and momentum trading, but that's not exactly, to me, that doesn't really evoke the idea of trading as much as I want to trade around places where other people are forced to trade. I want to trade where, or trades for me that are the most rewarding are ones where I've identified that the market is wrong, right? The market is trapped. The market is caught in a pocket. And also identified where the market has to go to get them to puke their positions and to get them re-involved forcefully at that point. So a lot of open interest analysis, open interest analysis is a pretty significant part of that, as long as, I should say open interest analysis, along with the things you see me looking at like delta, TPO charts, CVD, is a big component of that, determining, where that activity has come in and possibly where those trades are setting up. So let's go to the charts real quick. Just from a basis standpoint, Bybit is still trading below everybody. Binance is still trading below Binance Spot. Coinbase is still trading above everybody. But one thing that I've noticed is that the basis or the discount between the futures market and the spot market has shrunken. So the entire time up, we've had this premium between the spot market and the futures market. So I'll just quote Binance and Bybit right now, two extremes. One is the leading market for spot. One is the leading market for people that get involved at the wrong time, right? So are fading the trend. So that has been that delta. So when I say delta in this case, I'm just talking about difference. Has been most of the time. Sorry, I have a freaking itchy nose right now. I got to shave that beard again. Most of the time throughout this trend, that basis has been like 50 points. So $50. So Binance trading at 29,000, Bybit trading at 28,950. All right. So this has been kind of a norm. So you establish norms, right? Because then you're going to be able to make judgments against them. You establish norms in ATR so that you could determine what move stands out. You establish norms in, you establish areas of balance so you can see when things are outside of that standard deviation. You establish norms in prices and basis so you can see when things change as well. Throughout the course of this move up, we've seen that when pullbacks have come, funding has gone negative. Right? So things have changed a little bit, right? We're not seeing as extreme behavior into the low as we saw previously. We're not seeing that this basis is that wide anymore. So I don't know. This seems like it's something that has merit, that's worth paying attention to. I think that I said yesterday, I don't know where the next $500 move is, but I do know where the next $2,000 move is. And I've heard this said before. It's like an old saying. The point is, I don't know whether we're going to pop up or down in the next day or two, but I feel confident that I do know the direction of the next bigger move, right? So I don't think we're going to 35K, right, from here. I think that the next bigger move is probably down. What is a big move? For an intraday trader, a big move might be 1,000 points, right? That short that I took yesterday, again, just to make my positioning transparent, I have a new Twitter account. It's called Man of War, after arguably the greatest racehorse of all time. Looks like my Cantor and Clark avatar, right? My horse avatar, but inverted. My positioning is I'm still hedged BTC. So I'm still flat. So I hedged spot, right? I've talked about this. I shared this positioning on that page above 30K. Originally, I hedged at around 28, closed that hedge out at 28.4, rode that 1,000 point move up. I reestablished hedges. I'm still hedged spot. So I'm still, for all intents and purposes, flat spot. I took a swing short yesterday from originally it was 30,400, moved it down to 30,300 and 30,200. I added to the position and I closed it out 1,000 points lower. That's a big move to me, right? For someone who looks for a multiple of ATR, for someone who considers capturing daily ATR in 30 minutes, or I should say, anyone should consider capturing a day's ATR in 30 minutes a significant move. For me, if I'm an intraday trader, I'm looking at trading. I'm looking at capturing. I'm speaking for you. If you're an intraday trader, you're looking at capturing a multiple of a 30-minute candles ATR or a 5-minute candles ATR if you're a scalper, right? Or even less. So that was a big move. My point is, I think that we're probably looking at a deeper pullback. I don't think it's going to, I'm not like calling for much lower prices. Like some people, it just doesn't make sense. We have levels that we should respect. I don't know if we will respect them, but I think it's fucking stupid to call for 20K when we haven't even hit 25 yet. It's like, I get it. You know, if we hit 20K, it wouldn't be surprising because Bitcoin just, everything it does is crazy. But the point is like, all right, that's unreasonable. Like there are levels before that where, you know, reasonably we could expect some kind of interaction and response. Like why are we just writing those off like for clout? Anyway, so we're seeing that basis tighten. As far as just where prices are right now, and I'm still waiting for some kind of, as far as taking trades during the stream. So just to qualify this because I didn't mention it. So we're back into that gap right now, but ideally I want to see some kind of throwback back towards today's high volume node. So maybe we push back above value or back above this opening range. This is this bar right here, that black bar and that black bar at the low. That's just the opening range for regular trading hours. So just after 9:30, the low, the high of that 30-minute range. So a lot of the times you'll see that if we're really wide off the open, you know, we'll have a day with a ton of dispersion, a ton of mean reversion. It's not something I expect continuation behind. But ideally, I'd see this kind of come a little bit higher and test this level again. So 13,130, not for a rebid, but for a reoffer. If my idea is that this is going to continue to roll over throughout the day and go into that, again, sort of sweet spot around 2 p.m., where we see some of those hedges unwound and where we've had some stronger moves that have come because of it. If we're still basing out into that, and then we're trading back above the opening range, again, 30-minute opening range is what I look at, and we're seeing that it's being rebid there, then I'll look for a possible continuation play again for the longer setup that the long setup that I just talked about. Right now, not really interested in this. That's why we don't have the DOMs open. I have another chart that's above the screen that I'm looking at too as well, so we could, when trades arrive, we can go ahead and take that. I've already captured 19 points earlier this morning. So I'm not trying to get too aggressive during the stream. As far as BTC goes, last stream setup worked out perfectly. So last stream setup, we talked about these single prints. So again, those single prints are, if we're looking at a TPO chart, we're going back to, this is ETH, going to BTC. That was going back here, right? So that was 29,400, right? So 29,400 is the single print zone. So 29.6 it was, 29.6 up to, I don't know why I pointed at that and then read that still as 29.4, but it's clearly 29.6. So those singles right there. So that was the area where I shared on that Twitter page. This is the area where it's not the area where you say this is where a reversal is going to happen or this is where things are going to break down further. It's just the area where, as a trader, I can begin to identify levels that I want to show up at, meaning not put a position on with absolute certainty, but levels that I know are worth paying attention to. So I don't always have to look at the chart. So that threshold is the beginning of the gap, right? You had a single print gap up here. This is the more recent single print gap to where we were during the stream. The idea was if things are going to get cut off, they're going to get cut off there. If we're going to see continuation, we're going to see continuation there. The setup that I gave was, actually it happened perfectly, and I'm not patting myself on the back even though I kind of am. The idea was for this setup that the best long setup would arise off a move that took these lows and then reaccepted into this gap. So that's exactly what we got. I think the target that I mentioned during the stream was these highs. So I wasn't talking about us ripping all the way up here. You know, I had talked about if we accepted into this gap again, so we take these lows, accept into this gap again, give us a sort of prime setup would be the retest of the high of the structure. Then we're looking at these highs taken, and then we could see what happens at that single print gap up here as well. So point is, you know, accept into this level. You got the rebid right there. They're looking at targeting from 29.6 up to 30K, right? And then ultimately we'll see if maybe we get something to buy right there, something to sell right there because it's into another gap, or in this case, the market just ripped through. I don't think you really had, I mean, this is a 30-minute chart, but we'll go back to that on the 5-minute. You didn't really have much time, right? So you can see there was development here, but as soon as the market, I'll draw it on here because the gap is right here. As soon as the market like tapped that level, it was in. It was across the other side. But you can see where it came back to establish value. It filled out and started trading back within that gap and filling that out, which is something that you see often. And then continues to trade above it, fall back into it before ultimately losing it and trading lower. So where we are right now, we had a similar situation yesterday. So that 29.4 level, that was the gap in this double distribution. So this was an area of balance, high conviction move down, area of balance. I got into this a little prematurely. My idea was, though, that there had been a lot of these setups where you had a base form, move up, big move down, puke into that low, and then a larger reversal. I did think this was going to be sort of a time is of the essence move where above 29.40, I mean, we might get a pretty rapid move up to 29.8 and higher potentially. In this case, like it paid to actually wait, right? It paid to be, I think if you're trading with TPO, you know, and that's where you're starting, I think it pays to just respect the 30-minute rotation qualification for certain setups, like acceptance being one 30-minute rotation or two 30-minute rotations, which would be, you know, an hour. Because you could see above, we didn't really have any of that above 29.4. You know, I got in this based on lower time frame price action. But what I said was if we trade back below the high volume node for this, that it's off the table and that we would be looking at continuation down. So for me, that was 29.9. So I ended up closing out that long. So again, this is all on that Twitter and then getting short right under 29.9. And the point was there was a good amount of activity trapped down here. There was a ton of longs building up on Bybit though. And pretty extensive, right? On Bybit, there were 10,000 contracts that came into the market for no price action, really, just market moving sideways. And on Binance, there were like 6,000. So that's pretty weird that there's actually more contracts tagged on Bybit versus Binance. So my thinking was, well, what are the chances that Bybit gets the move right? And again, nothing against Bybit because I love Bybit. I think Bybit's a phenomenal exchange, but I think because, and this will change, I'm telling you, this will change after KYC goes into effect. That is where most of the retail flow is. So most of like I would say like the Robinhood retail flow. And that flow will be gone and it'll probably be more like BitMEX where it's a little bit more informed, smarter flow, less like people punting $1,000 accounts on 100x leverage. I think it'll be cleaned up a little bit. But the idea that Bybit would be responsible for tagging on all that risk more than Binance and then be right about the direction of the move up just didn't sit well with me. So once we traded back below 29.9 where all of that risk was tagged on, so averaged out, I just knew this was going to puke. Like it didn't come off right away. A little bit of it came off on the reversal right here. But once we started holding that level, and just to go back to that, so that 29 level, just to show you what it looks like. So you could see where we're, you know, going all the way back to the beginning of this move, 29.2. Here we go. I got to make that a little wider just so remember, it's never a price point. I'll label the price point just because it's easier than saying the whole range of prices on Twitter. But it's always a zone. And I would say if you're looking to identify what kind of zone it is, use one 30-minute ATR. So use something like, or not even a 30-minute ATR. Use like a half an ATR. Don't use a multiple like you would use for stops or just an understanding of regular volatility. Use like half an ATR. So we'll say, just for all intents and purposes, like $100 zones because these ATRs are pretty tight lately. So 29.2, 29.2, 29.2, 29.2, flushes, and there's the reoffer right there. So the market flushes, looks like a reversal, but the first place it dies is there. So I didn't short on the breakdown, right? That's, obviously you can imagine what happens. You short into the hole. The short opportunity is when that level does its job. So you lose 29.2, market comes back up, no rebid, instead reoffered and starting to melt lower. So I ended up shorting, I think it was like, it's on Twitter, it's 29.190 or 29.180, I don't know. So I ended up closing that out again. That was like a 600 point move. So that for me was a good move. As far as right now, this is, and these are just standard deviation bands for anyone who's wondering. I've talked about using these many times before. Strong trends, holding outer bands. When price is rotational, trading more around VWAP, trading more around the one standard deviation. Let me get rid of these now because they're not relevant. If this kind of has to be the low, I mean, there's the if people are talking about, let me try to order my thoughts because I'm thinking one thing while I'm saying another. There are people that are talking about fractal right now, going back to post-COVID. This is a much shorter time frame that took place over months. We're looking at a 4-hour chart, but there is quite an uncanny similarity between this chart on the 4-hour and then going all the way back to that right here, right? And not for nothing, the merit behind this is the same as the merit behind me saying that this has to hold too, right? So I'm not selling this level, I'm not shorting this level. There's plenty of great rotations to take intraday and around this level. But as far as it is right now, this is the level that has to hold. I think this is the level where you trap a lot of shorts. And I'm in between whether or not I want to take my hedges off. Again, this is a 4-hour chart. This level is a big level. It deserves a little bit of development. So look at it on an hourly, see hourly development, see daily development even, before writing it off or making any major decisions. For me, before taking my hedges off. We had a good response off of it initially. Stops being blown out, open interest coming off, positions being wiped. It's basically the top side of this consolidation. So if we're looking at, this is multi-week value at this point, and you see a ton of compression take place from left to right. This is the area where you would, expect price to form some kind of base. If we're getting a retest at the top side of the structure, because there's not really, if we lose this low, I think that you end up retesting 27s. We ended up coming into the low, but not taking the low before the move. We filled that gap, so traded back within this fair value gap. That was an imbalance move up that didn't really result in any kind of further trend, right? So the market is obviously slowing. If you looked at like ATR, if you looked at volumes, they're off. If you looked at momentum, it's off. So the market is definitely in a place where it's going to cool. I would honestly expect more range choppy behavior than anything else. I wouldn't expect that this just does this. Again, where is this all happening? It's happening into the end of April, going into May. I don't expect like anything major now. I kind of expect more range conditions. But does that happen above or below this structure? It has to. If this is going to remain bullish, I think it has to happen. Honestly, this has to be the level. I hate to say like it lose this level or it's lights out. That's a popular phrase, but that is kind of the truth. I mean, lights out at least for another 2K. I'm not making any bets yet. Again, we had a significant response earlier this morning, but you could see that that's kind of unraveling already. So you had, if you're looking at this on like an hourly or a 30-minute chart, you had your 3-drive structure. 30-minute chart is probably better representation. You had 3-drive structure. You've had multiple drives at this point. This, honestly, I was long this, so I had long this, talked about that. I didn't long it off of the low. I longed it when we traded back above where a good amount of the activity came in, squeezed some of that, pointed out the activity getting trapped in the footprint and how to use that. But, I mean, if you have excess like this, so better example actually is a TPO chart. So originally this was like a P-shaped profile because you had a good amount of shorts coming off and covering that were tagged into this low. If this is the low, it shouldn't really trade back into the excess. So this buying tail, right? So this excess from, it looks like single prints, but it's not separating two bodies. So from 28.5 down to 28.2, this is the area where buyers stepped in, right? Where is price being accepted? Where is it being rejected? These tails, that's where it's being rejected, right? The body of this is where it's being accepted. So if it's accepted higher after a move like this, you want to see that it's continuously building a base within that structure. If it starts losing that and you have new activity that comes in, it's just more positioning to unwind. And then trading back to this level, you already hit that level for a rebid. So we already hit that 28.6 level. I mean, how many bottoms of excess are we going to create? It's not something that you see that's that common. So if you start trading in 28.5 again, it's likely that it's going to go back to the low. And then, I don't know, does this hold this level? Probably not. I mean, you're probably looking at least 27.8. You have a naked POC down there. You know, taking the lows of that structure leading up to it is not that attractive. So going back to, I mean, if we look at this on or I'll use this chart actually. This is a 4 hour. Just look at all these lows. You know, that's a really tight consolidation. It's kind of uninterrupted for a period of over a week, right? Just slowly, marginally higher lows across the structure. You got to imagine that this position was kind of a free ride from that point. Like no probing from going back to, you know, aside from this minor move, going back to the 6th of April, no probes, right? You know, for the next so the next 3-4 days that followed before this move, you didn't get any sweep of that. So I imagine there's probably a good amount of positioning that is defined around that level. And then if the market trades into that, it just probably leaves you with something that, while it might correct again higher, does one of those really ugly grabs, right? Now, are these grabs as prevalent now that some of the more significant counterparties responsible for them are gone? I don't know, but it's not something that's uncommon. Those kind of cascades when you have structure build up like this. So really uninterrupted sweep, but you know, that's a low, and then a slightly higher low, and then higher lows. So it's just stop, tranche, and not to say that positioning is necessarily there. Those, you know, the further are you away, the more likely things are stale. But if it's the bottom, right, there's a good chance you have people defining spot positioning based on high time frame market structure locally. So that's, I don't know. I think it's kind of self-explanatory. So ideally what you have is you have the market continue to move sideways here. We don't want to see us trade back below 28.5, kind of like what we're fucking around with right now. Excuse my language. The idea that the way that I think of excess, especially when you have back-to-back excess, this is obviously more, this is a buying tail, but this is far more, is you don't want to reapproach it. You don't want to, do you want to test that buyer again? Do you want to test the, you know, the intestinal testicular fortitude of those buyers again? Do you want to see if they have more powder left? I mean, probably not, right? And not to say my opinion matters, like, yeah, can we? But you do know if you get back into 28.5 and you don't see any presence at all, you're probably fucked, right? I mean, if you get back to 28.5, 28.450, you don't see anything, and you get one of those candles that just starts developing, you know, we'll go to just the footprint. You get one of those candles, probably easier to look at a box that's just developing into the level like this, slowly trading into 41.5, slow. You know what that looks like, right? It's that thing where it's just, no kickback at all. The candle's just melting lower, and it's this for a couple seconds, and then it's bam, all at once. That's what happened back here, but now we're retesting that level. So the point is, it's not necessarily something you want to do. As far as just the left to right translation of this structure, there's a bunch of selling coming in, right? If we look at open interest, you have open interest up on this. It's not to say that so you can imagine there's a good amount of long open interest in this, right? But it's not to say that all shorts that come into the market have to go punished. So a lot of times when we break through a level and you've had multiple kickbacks and then the market continues to melt into that level and you get open interest built up on the loss of those levels further, that it's just more people getting behind the move that are going to help the move go. So it's sort of like when you have a trend that's beginning, there's times to look at open interest and determine, okay, these people are trapped. I'm going to look to take the other side. And then there's other times when you have to know, oh no, this is people getting behind this move and fresh positioning coming into the market. And we can't say that every seller that comes into the market is wrong, right? But what we do know is that when sellers come into the market, if they overwhelm buyers, the price goes lower, right? So if price is not remaining bid here, and back to these setups earlier, what I was looking at in this footprint, and we're going back down to just low time frame right now. What we were looking at back here was after the market ripped up. So let me just set this to, what setting did I have it? I had it on I think I had it on a 3-minute chart. After the market ripped up, I had it on a higher aggregation. Put the mono, I want to put the color candle on so we could see. I changed the color of it, didn't I? I wanted you to be able to see the red or the green or the blue. After we ripped up, price was remaining bid. So we're looking at, this is the delta profile, but bid ask. So you can see large pockets of volume coming in, and the market is now remaining bid higher. And what you can't see, because I don't want to change my color settings right now, is this next follow-up candle. We see selling come into the market. If you're looking at the tape at this point, you would have seen that. And instead, that just gets absorbed. So we're building a brick wall right below us after that reversal. So, I mean, that is price being rebid. If we're breaking down, the opposite happens, right? Sellers come into the market attempts to trade back higher, and then you get something where you get a footprint that, if this was your footprint on the bid ask, a bunch of buying comes in, and then price remains closing below that. So that new activity comes in, price is unable to hold that activity, it got absorbed, and then we're trading lower. It looks like it honestly could happen right here. And you got a good pocket of volume coming in. It's harder to tell on the stream when you don't have the color candles, but I don't really care for the color candle. I kind of like the mono candle just to see less of something on the chart. But you're kind of seeing it right now, honestly. So there's buying coming in, but we're just continuously remaining offered and moving lower. But we're above that excess, so I wouldn't get overly aggressive about anything. I would want to see that. I would want to start paying attention to that move further down towards where that begins. So here is that earlier. Jeez, where's my water? Earlier I talked about not wanting to get behind this move right away, of filling out value. So we were talking back here about not wanting to get behind that yet because I wanted to see actually we were back here because here's the opening range. I wanted to see whether or not this is reoffered or rebid. So that opening range level is a lot of times the area when you have a good amount of range within price, where you see when price reaccepts back within this. If we have some kind of failure here now, I'll probably look to see if there's any weakness to get behind for a further rotation down. Right now, I mean, we're seeing, it's hard when I have everything on the same screen for the sake of that actually helps. This is the ES, the NQ. There's a lot of buying coming in down here. I'm still going to probably wait a little further after noon into that 2 p.m. slot to see if there's anything. I want to take advantage of possibly what is a larger move setting up, just because I could see it in price action. The way price is just all over the place, wide ranges, big reversals. I don't think that this goes into Opex muted. So something like this, back above the opening range, here's the high volume node we talked about earlier. We ended up building that below us now. So before we came back to this, it was up here. So we'll see if we have some kind of reoffer up here, and then can take advantage of weakness back down in this direction. And again, just to reiterate why, it's looking to fill maybe the remainder of this out. Now I won't sell something like this, right? So let's say I'm looking on the, I'm looking on the short side of things, building a case for lower prices or a possible setup in the making. I'll never just sell something like that. The same way I'll never just buy something like that. I want to see that sellers step in, so the level is identified, and then I want to see, a lot of times you'll see, and this is why understanding what like rotation size or periodicity to pay attention to is useful. A lot of times we'll see that the market will trade back to that level and then it'll be reoffered either at or slightly below. So you just want to be able to, you don't want to get in trades prematurely. The same thing applies to BTC if you're lower time frame trading. You don't want to knife catch. It's knife catching in this direction now, but it's the same thing, you know, if you're trying to knife catch at the lows. You want to see some kind of development. Because even if what I qualify as development for my intraday trading, a swing trader over the course of weeks does not qualify that as development. He looks at it and says, that's 30 minutes worth of time. But for the sake of intraday trading, I need to see some kind of development. And the point earlier that I was making was if your setting is too low, you'll think you're seeing development, but you're not. You're seeing 30 seconds worth of price action, not a whole lot traded, but it's printing a bunch of candles and you're looking at it and thinking it's more substantial than it actually is. So we'll leave that there. That's not the native draw. That's not the drawing tool. BTC going. So let's see. So good amount of volume trapped into that level. So now what you want to see is you want, I mean, it is the level, right? 28.5 is exactly where I said. So if we're trading below 28.5 now, and this is a good amount of volume that's coming into this level, and you're just looking at the pocket of activity that we caught back down there, if we're trading below 28.5 again, this thing is going to puke. So that's why you don't get involved prematurely, because that level is really clean. Those single prints, right? We just ate into it a little bit, but we're at 28.5. So again, not singles, but the excess that is part of single prints, the single column. So you can see there's a lot of it, you know, from a volume standpoint alone, you got a lot of volume down there right now. So again, that is, we have an uptick in open interest. So it's fresh positioning. If we look at Bybit, it's probably either longs completely stopped out, which it is. So predictable, right? So those stops ran, long stopped out, big drop in open interest. But I'd rather keep an eye on Binance because that's where the size is going to come in and dictate the course of this move. But now on the long side of things, would you just, if you just see that this level holds, you know, imagine for the sake of this, because I'm not going to take this trade during the stream. I do think, though, if we trade below 28.5, I think you could target. You could probably break out short that, honestly. At least to, you know, 200-point move is going back down to the lows, but I think that you're looking at further extension at that point. So now pretty thin. So not a whole lot of selling coming in again at the low, but you can see it's still moving price without much effort. So let's see if we puke now. So now more volume coming in. I would be genuinely surprised if we just rebid that at 28.5 and then continue to move higher. Same exact level though. So just building volume here. I mean, if we added this together now as like a 5-minute rotation or a 15-minute, probably capture it even better. That 28.5 level has now just accumulated, just shy of 40 million contracts worth of volume. And maybe that is the rebid. I don't know. I mean, to get into just on the long side of things, I don't think that you would want to just, at least for an intraday trade, I'm not looking at anything locally right here. So I think that personally, and again, this is if it holds that 28.5 level, that fucking volume thing is in the way. Let me zoom out on this instead. We'll just go to Cryptowatch. I think personally, what I would want to see now is, since you've had this pocket of activity that's really clean over the last 2 sessions, I think honestly I would rather see, so instead of buying this rebid here at those singles, I mean, maybe the setup is there if we start putting in constructive price action and are trading back above these local highs. So back above 28.7, and I don't mean a single wick. I mean, we're above and it's rebid again like this, and then maybe you target 29. But honestly, there's probably a lot more certainty in trading back above this range now and targeting something like 29.4. And then, dealing with that gap up there again. I mean, this right now just has the potential to nuke much lower. So I'd rather want a little bit more of price than now buying the 1, 2, 3, 4th test of this level. And you're seeing, you're getting more volume into this level, not as much as the prior, but so maybe sellers are not as willing to sell it again. We'll see. I mean, looking at Binance, it does look like there's a good amount of shorts that came in. But as I said, if we're just isolating this open interest up here, right, that new activity that came in is possibly just something that confirms the move. Like I said, when a trend change begins, it doesn't always mean that you just fade the open interest. So as long as, so there's no major squeeze potential until you're back above these highs, right? Because at that point, this low corresponds with that increase. So it's, both sides in positioning. It's not just aggressive shorts or aggressive buyers in any case. It's two counterparties coming together. A lot of the times it's a market maker and one other aggressive side, but there's no major trouble for it. Even say if this was just aggressive shorts, no major trouble for them until we get closer to where they got involved, right? And then maybe we start putting them under pressure. But right now they're just in the money, right? Any questions, guys? I'm just going to look at the chat real quick. GCR just tweeted it's over. What was I going to say earlier? Doge. Wow, Doge. So I was T-whopping short Doge. So that worked out well. Just to be clear, I was long Doge for like a week. I talked about it last stream, taking position off. The idea was longing into 420, right? Possibility of something meme related with Elon and the launch today. And there was a bunch of meme coins pumping into this. I don't know. It felt like something that had the potential to get ugly because of a lot of people buying into this event and making it bigger than it actually was. So, and the market had already pumped a little bit into it. So I actually was T-whopping short from 92. Not 92, but you know what I'm saying. Those digits. I haven't even bothered to check. Actually, it's 86 right now. So there's a good amount of activity down there. But I don't know. Not, again, I don't remember how many times I've seen a structure like this just continue to rip up, but I think that obviously I say one thing, but then I'll just take the trade when it shows up. So maybe if we're above 28.7 and if we're basing out above that local high, maybe at that point we have a target of 29. But the real, maybe much larger move is best taken with development above 29. So again, that would be, I'm just going to put a drawing on the chart so it's on every other chart as well, just to show you why 29. So that is where all that open interest came in, right? That is still rewarded if it's on part of aggressive sellers. And that is also the range high of the structure. So range high extremes for the most part. So I think if you are, I mean, you see a bunch of confluence, right? You have the low of this move, the high of this range, and then locally from a positioning standpoint, you have that positioning that could possibly be unwound in an ugly manner. So you took that low too. I mean, if we get something like that, then yeah, I would ultimately look at this area being tagged into that gap. So 29 to 29.6, 29.5, and then maybe we judge from there whether or not we're going much higher. Obviously, other things have to happen for that to occur. I might sell this. I'm going to go ahead and get a starter on. See if we can get a lower high here. Just looking at a little bit of less buying aggressiveness on this rotation higher than previous. I'd be willing to sell this up to 31.6, 31.5, 31.6. You guys have any questions? Someone just nuked a good amount of size into the book. Okay. That's good. Sometimes when you see those burps, it's before a reversal. So I just want to keep an eye on that. I might just close that out and let this play out higher. You don't really see it here, but I just saw it on the tape. So we're right around the entry, and I won't get aggressive with this right now, but what happened was there's a little bit of a burp, spread popped, and then we just came down a few points. And a lot of the times you'll see that that will be something that happens before the market goes the other way. So sort of like what it's doing right now, but I'll give it some breathing room to see if maybe that's it. And you guys can ask questions right now. I'll check the chat in a second. Let me check the chat. Let me flatten that out. So what I was just talking about is a lot of the times you'll see the market jump. Let me put on a different chart for you so you can see what I'm talking about. Let me zoom in actually on a lower setting, just a tick setting. So right here, so that little move right there, we were trading at 13,141. And then all at once we traded back down to, let's see, that was a good idea, to 13,137. So it wasn't big, but you know, one slug hitting the market, and you'll see that price will sort of just pop. A lot of the times, if that move is down, I'm expecting some kind of move up. If that weird pop is up, I'm expecting a counter trend move to that, so a move down. And this is something you have to watch as it's, you know, you have to keep a good eye on the tape. This doesn't mean that the market can't continue to roll over the direction I was just in position. But what it does mean is that entry might not be a good entry. So it might be better off taking the position off and then waiting for a better entry. But many times it has been the case that you get that pop and then the market rips in the opposite direction. And it's almost like a little spread blowout, a little stop hunt almost. Yeah, I don't want to attribute too much meaning to it as to what the intention is, but all I do know is that I was short here and that I could have been further underwater and would rather wait for further development now, knowing that. If we start trading and being rebid now below this high, I'll probably just open the short again. But it's just, all right, so can I avoid having the market trade a little bit against me? Yeah, because I've seen many times that this has happened before where it's done that and it's traded a lot in the opposite direction. So just something to consider. And if I wasn't in position, if I wasn't short and wasn't sort of micromanaging that and monitoring that, it very well probably would have been the case I would have just longed for a scalp. And this is where I talk about sometimes I take very brief scalps. So that's that. But I don't want to sell this again until we're getting reoffered right around 13,144. And then maybe it doesn't, maybe we rotate lower now and I missed that, but it's just the criteria I have for my positioning. Because so many times the NASDAQ, you'll just see this trade towards low. Oh my God, you know, it's going to rotate all the way down here to the next structure. And it's like, nope, we're going to rip up, you know, another 100 points in a split second. Not to say that's going to happen, but that's my point. It's just, this market is just wild. That pocket's lost. We get a nuke now. So we're trading below four. Let's see if we get it. What target would we be looking at? That we're filling out the, wait, let me close this again. God damn it. There we go. So the breakdown of what 28.5, I said we'd probably revisit the low, so 28.3. But then overall, if the market doesn't see a response, we're looking that POC, and then to the next POC is 27.881. Still just catching, selling at the low. But the NASDAQ, again, still moving down. So, damn, that was, you know, I don't like to just apply this like same logic that you'll see crypto traders apply, like, oh, stop run, and then this is going to lead to a reversal. A lot of the time, some of the better setups I take are the opposite, where it's a high like this, market reapproaches that level, and you see it's just completely absorbed here, and it's reoffered there. Or the inverse of that, instead of like a swing failure like this at the lows, you know, a lot of times you get something like this, where it's like there's a ton of buyers here, and now there's a ton of buyers even higher up, right? So it's rebid at the level. Whereas this, I mean, I can't tell you how many times I've seen this happen, or this looks like it's going to continue much lower. This gets taken, then we're just doing this further along. So I won't chase that. Still just building volume. And this is Binance. Tape's picking up, but someone's still buying that low. I don't know. I think that once that level's gone, it's done. Meaning, I think that since we're already below 28.5, I think it's just whoever's hanging on right here is going to get rolled. What? Help us get it, friend. Give your contribute. It's a team job. I don't know what you mean, man. Ooh, you see that? A little blowout and then 13 mil. So that's, I mean, if we're looking at Cryptowatch, that was a little spread pop. So going back, you could see that it's popping. I mean, you could see it right here. That spread is not saying tight. 1 million BTC sold. Nothing really coming through on Coinbase, but Binance is selling. Spread's popping. Oh, yeah. Let's go. What did I just say? We'd hit 28.2 and fill out the bottom of those singles, and we did. So that's cool. So that's, again, I didn't take the trade during the stream, but that is a pretty cookie cutter setup for how you should look at excess after multiple tests of lows, and seeing that the pocket of volume that came in below where you would look for that rebid has been rolled over, right? So you see the activity come in, give it a little bit of time to develop, market kind of shimmies around, and then when that level is lost after you get that activity accumulating, there's only one direction, right? How do you feel when your positioning is immediately put underwater, right? You just, if you're into a gap, you get rid of that shit. So okay. Daniel, I didn't know you meant at first, man. I thought you were like just coming to the stream saying help me. Yeah, no, I'm actually in between switching accounts, so I can't live crypto trade right now, but I will get back to live crypto trading next week. So I'm actually, I'll wait for next week. So it'll be good. ETH is surprisingly holding up a lot more. But now the NASDAQ is just absolutely taking a shit. And it's unfortunate that I didn't hold on to that sell. But it's not unfortunate, you know, it's just, it was the right thing to do to stick to my system. You know, this is a higher aggregation right now, but, or a lower one, excuse me. But, you know, just a second ago, I was short some contracts right here. I had mentioned being willing to add literally up to, what did I say, 3150 to 3160, where I'd be looking for the reoffer. When I noticed that little pop, I got out of it thinking maybe we'd see further extension. And then instead, that pop was not much. And that would have been the prime area to just hold on or add. And instead, I got out of position. But the idea was right, that this was the area to see a reoffer or to see sellers step back in. It turned out to be the right area, right back at this high volume node. And it's not cool to actually call trades as much as it is to take them. But I think you see, hopefully, you could pick up on something that I'm talking about. All right. Anything else? I think I'm going to wrap it up. It's 12 p.m. Buyer stepping in. I don't know. You know, you had some little blowouts, but again, it doesn't make sense to knife catch this right here, even though you get the best price if this is the low. That's not the point. You should have pretty strict reasoning for why you get back in now into this area, because it just has the potential to go much lower fast, right? I mean, if we're just going to be overly simplistic about this, all right, most of the time when price reaccepts within a range, here's your value area. Think about it like this, right? I've said this before. Think of that as, and these edges as this. And you are just an object traveling towards that edge. Now, if your marble rolled towards that edge, you might just bounce off of it, right? And this might be your support, and this might be your resistance, depending on what direction you're traveling, coming up, coming down. But if you have enough behind the move and you make it over that edge and you remain on the inside of that edge, you more than likely are going to visit the bottom, which is the midpoint. So an area that's very accepting of prices. And this is just a way that I like to think of this, by the way. This is not physics or how actually, there's no causation in this being an actual divot, the way that that would be a divot in the ground. But it's just an accepting area of prices. It's an area of positioning where you might see unwinding of positioning. It's an area where positions are invalidated. It's an area where positions are validated, right? Where shorts and sellers might come into the market. So if you're looking for longs, I just think it makes more sense to look on the top side of that, because the possibility of this moving from point A to point B is pretty strong, at least to this point, 28. So, we're 400 points above there right now. This can happen in a split second, and this can happen in a split second, right? So don't knife catch. What did I mean though by this? If you knife catch this, obviously you're better off than someone who bought up here. But I think the EV of buying up here is greater than buying down here. So you have to be willing to write this amount of money off and say, all right, I'm willing to leave that on the table for more certainty higher up. Because if this goes against you, you're fucked. All right, I think I'm going to wrap it up. Hope you guys enjoyed the stream. What's today? Thursday. Yeah, tomorrow's Opex. Hope you guys have a great evening. Shout out to the sponsors of the stream, Bybit. The link is below in the description. TradeBybit.com. I think that is it. One other thing that I want to add to that. Obviously, no, I was going to say thank you to Cryptowatch as well, but there's a link that I want to share that might not be in the description. It's my Discord link. I'll post that again on Twitter instead. I was in between whether or not I want to open my Discord right now, but I don't know if there's chats that I don't want to dox, and I don't know what screen it would hop up on. But there are more links in what I was going to say is, there are more links in the Discord, but I'll post a Discord link on Twitter. Anyway, shout out to Cryptowatch, shout out to Bybit. Those links are in the description below, so make sure you check them out. There's that ripper back in the NQ, so that's why you just can't short into a move too late. For those of you that think like, if you think this is going to move down further, why don't you just get behind it now? And it just doesn't move in a straight line. It rarely does. When it does, you're not in the move. And if you are, you're lucky, unless you're on the wrong side of it, right? But yeah. All right, guys, that's it. Thanks for tuning in. Hope you guys have a fantastic weekend, and I will see you next time. Where is the stream? There we go.